Mackenzie Investments, one of Canada's largest fund managers, is turning less optimistic about stocks and sees better value in bonds after the 13% rally for global equities in the first half, and central bankers' campaigns to raise borrowing costs are starting to have an impact on the economy and will eventually force investors into a more defensive mode, Leslie Marks, Mackenzie's Hunger Chief Investment Officer of Equities, said in an interview.
There's a 60% chance of a U.S. recession in the next 12 months, according to economists in a recent Bloomberg survey.
And we think that as the data continues to unfold throughout the rest of the year, people will see that the economy is in fact slowing, crimping corporate earnings.
She said the relative value exists right now in fixed income.
That the firm strategists recommend adding investment-grade debt and going underweight stocks. And Mackenzie's view echoes growing wariness among global managers that the rally in equity benchmarks is out of sync with the economic reality. While a boom in artificial intelligence has powered gains in global tech stocks, masking weakness in other sectors, hawkish central bank rhetoric is denting optimism about an economic soft landing. And the Pacific Investment Management Company is among those firms warning about the possibility of a recession in some developed markets due to high policy rates, making high-quality government and corporate bonds attractive. Mackenzie, a unit of IGM Financial, Inc., has $190 billion under management, including balanced portfolios. The Mackenzie Ivy Global Balanced Fund nudged its fixed income allocation to just above 24% as of the end of May, from 21% at the end of last year while trimming stocks. The vast majority of its bond holdings are investment grade. Mark said any recession is likely to be mild, but the slowdown in the economy is going to play a stronger role in the outlook for equities in the active Africa. So that's not an F. Within equities, investors should favor less cyclical sectors that will perform better in a tougher economy, such as healthcare and consumers' staple stocks, Mark said. She also likes Japanese and equities, whose benchmarks are trading near the highest levels in more than 3 decades. It's been an ignored market for a very long time outside of this year. She said, the Bank of Japan may yet be forced to adjust its policy of yield curve control, which would strengthen the yen to the benefit of foreign owners of Japanese stocks, Marks added. Mackenzie's Tokyo-listed holdings include medical equipment maker Terumo Corp. And retailer 7 & I Holdings, according to fund disclosures dated May 31st.